Okay, that's very helpful. Thanks a lot, Abhishek, for joining in. So that's the banks and the kind of exposure that they have to the Adani Group. By the way, both the pockets, banks and the Adani Group stocks, are the biggest losers today. But let's move on. CEAT's earnings came in below estimates in what was a seasonally weak quarter. The volumes were down 6.5% sequentially, with exports also being hit by macro headwinds. The positive, of course, is that margins have expanded to 8.7% due to a big decline in raw material costs. Kumar Subbiah, the Chief Financial Officer at CEAT, joins us now to talk about that. Mr. Subbiah, good morning and thanks a lot for joining in. You know, on a sequential basis, the volumes are down, and you did mention in your conference call that the two-wheeler OEM market is witnessing some pressure. Do you see a further slide in volumes in Q4, and what do you think you could end the year with?
Good morning, Sonia. Thanks for having me on your show. As far as Q4 is concerned, quarter on quarter, we expect a two-wheeler to grow. Year on year, as well as quarter on quarter, in Q3, we saw weakness in two-wheeler demand. Going into the next quarter, we expect the demand to pick up for two-wheelers.
Okay. All right. Hi, Mr. Subbiah. You know, the last time we chatted, we were trying to get you to give us a number on the margins. But it's good to see that there has been some improvement as raw material costs are cooled off by close to 4%, I think, on a sequential basis. The good news, though, from a shareholder's perspective, is it's likely to cool off by another 3% for this quarter. Putting that in context, and if volumes are going to improve, margins go to double digits in Q4?
In the last two quarters, Nigel, our EBITDA margin has improved from 6% to 8.7%. So about 270 basis points improvement. Okay, and commodity cost cooling off has played a role in terms of improvement in margins. You are right. We have indicated that commodity costs could go down by about 2 to 3% in Q4 versus Q3. So it should have a positive impact on our margins. I would not like to say give you any forecast for Q4, but we are not very far from 10% at this point in time. We are at 8.7%. So our internal target is always to reach a two-wheeler number.
Mr. Subbiah, I think you're being a little conservative, right? Volumes are going to improve. Raw material costs are going to go down. I don't think there are going to be any selling price cuts. So 10% should be doable, right?
Yeah, I think that's what I said. We are not very far from that number as we speak today. Okay, and there is a good probability of reaching that number in Q4.
All right, Mr. Subbiah, could you give us an outlook on two things? One, do you have a view on sort of raw materials themselves from here? I mean, what is your sort of outlook? And second, a segmental demand outlook as well, if you can give me a sense.
As far as raw materials are concerned, the Q4 forecast or a projection that we have given has considered the sharp drop in raw material costs in the last 4 or 5 months. In the last 2 weeks, we are seeing some upward movement in the raw material cost. Crude is now hovering around $87, $88 per barrel. And natural rubber prices have also moved up by about $100 in the last 2 weeks in the international market. So therefore, we have to wait and watch. We would not like to come to any conclusion based on what has happened in the last 1 to 2 weeks. So therefore, beyond 2 to 3% drop in Q4, we are not able to give any view. Okay, it all depends on what happens to important crude derivatives and rubber in the next 2 to 3 months. As far as segmental is concerned, exports continue to face headwinds, as we had earlier shared in Europe and also other parts of the world. So that is putting little pressure. Q4 outlook is little better than Q3, but considering world is likely to go through a recession and Europe recovery is still not very clear. So exports could still be a little bit under pressure. On the category side, we still feel, two-wheelers, we are still not able to get any visibility with respect to demand recovery in the coming months and weeks.
Okay, so you are a bit cautious. You're saying exports could be under pressure and no visibility on the two-wheeler demand. So if the demand does not improve, Mr. Subbiah, can one expect pricing pressure in the industry? Is there any under-recovery in pricing left for you post Q3?
No, as of now, hoping that 2-3% drop in raw material costs happen in Q4, the under-recovery would come down. And so beyond Q4, if 3% kind of a raw material cost reduction happens, we would get back to where we were, very close to that level, pre-COVID level. And there may not be any under recovery by end of the quarter. But as of now, we still have under recovery.
Okay, got that. The other thing is your debt, right? I mean, it's a marginal up move that you've seen in debt at about 2,340 crores. Of course, there's ongoing capex as well. Can you tell us how comfortable are you with rising debt and what is the max level to which you could take it? And do you have any debt repayment plan over the next, say, 12 to 18 months?
Okay. Out of our 900 crores capex forecast for the year, 3/4 of the capex we completed in the first 9 months of the year. So therefore, and in the current quarter, we would have a little over 200 crores of capex, so that we reached the number of 900. In the last quarter, we also managed to bring down our inventories sharply. So therefore, that was the reason why as to the incremental debt in quarter 3 was very marginal. So we continue to be very cautious with respect to our borrowings, and our forecast for capex as far as next year is concerned is also going to be lower than our current year. So therefore, from end of quarter 4 level onwards, we do not expect any debt to move up significantly. We would like to manage it at that level going into the next year. So as far as your second question on repayment of debt, our 2,300 crores of debt approximately has about 1,700 crores of about long-term and balance is short-term. There will be some repayment schedule in the coming year, but largely we also have a reasonable amount of undrawn limits in the overall long-term. So therefore, there is unlikely to be any pressure with respect to meeting the repayment obligations in the coming year.
Okay, all right, Mr. Subbiah, could you tell us the volume growth of at least double digits is possible for FY24? That seems to be the case for what the street is baking in. I'll tell you why. Because you have capacities that are coming on stream, exports market should revive, and the replacement market as well should show some traction. So at least double digits volume growth, doable for FY24?
Okay. See, in the first 9 months, we grew by close to about 24% over the same period of last year. So therefore, we are going to end the current year, FY23, at a very healthy growth, very strong double digits. As far as next year is concerned, the key growth drivers are recovery of two-wheelers, exports, and for us even OST, where we have some dependence on Europe. And the third is that OEMs in going into the next year. So I'm not able to comment whether it will be a double-digit growth. Okay, considering last 3-4 months, Europe faced issues. In the event that it recovers, we would like to go for a good growth. Maybe we would need a little more time to understand how the market is going to unfold. Internal plans are in line with what you said, but reality, I think we'll have to wait and watch. So,
any more losses from the Sri Lankan JV?
Sri Lanka has always been a profitable business. In quarter 3, what happened, the government increased the income tax rate, corporate tax rate, effective 1st of October. So from 18% to 30%. So in the balance sheet, you normally have something called as contingent liability. Okay, and the contingent tax liability, not contingent tax liability, deferred tax liability on taxation. So therefore, there is some effect on account of increase in income tax rates to the tune of about 6 crores in quarter 3. At the gross margin at a EBITDA level, CEAT Sri Lanka continues to perform well, but however, they are operating at less than 50% of our normal volume as of now. So the economy is yet to recover, and therefore it has some impact on Sri Lankan profits.
All right, we'll leave it at that, sir. Thanks a lot for joining in and giving us an update on the business. That's CEAT for you. By the way, the stock of the moment is Dixon Technology. It's down 15% right now after the cautious commentary from the management. So that's taking a hard knock this morning, Dixon Technology. They've lowered their guidance. They told us about how the mobile business is very slow. Global shipments are down 17-18%. So that one's really taking it on the chin this morning.
Dixon, by the way, Sonia, opened 6.5% lower. Yeah. So it didn't, the opening was not at circuit. So there was maybe a brief moment to kind of get in. Before, of course, it was limit down 10%, and from 10, it's kind of quickly, very quickly moved to being down 15, where it'll stay. And then, I mean, it'll open up. By the way, the Nifty has had one attempt, a feeble attempt, but one attempt at a bit of a recovery. I mean, we were down 130, 140. There was a 40-point pullback, which is now, it's all happened in the last 5-6 minutes. It's already in the process of being sold into. Let's see. I mean, are these levels around 17,800 or so, which is the lower end of this band, right? All through from the last week of December 2022, this has been the band 17,800 to 18,200. Now you've broken below that, even level-wise. But will this hold? I think is the question that one needs to watch out for. Banks are under pressure. Just a quick look at the Nifty Bank as well, which is off the lows. I mean, the Nifty Bank low in the morning was 47.33. We're about 200 points off it, 40,988. It's a 1.5% cut on the Nifty Bank as well. More stocks in focus. Lots happening market-wise. We have Shashank Srivastava of Maruti Suzuki to discuss their third quarter results later. And of course, we'll also have the